Hi guys, today we are talking about S&P 500, how things look like. From here, what is how can we see what going to be happening in the S&P 500? Well, yesterday, if you see it's 0.39%, just there is correct, there is upward uptrend in the S&P 500. Where in 5 days, if you see, there's still 1.83 is the negative, and in a month is 0.6. Means in a month the S&P have not given any kind of return. In 6 months it is 11% YTD 24, and in a year it's 29. So like now what, like how we see this, like what going to be happening and all. So first, let's see, like for like yesterday is 0.39, where in a month, like week 1.51 is a negative, where in a month zero point 0.4, then hardly. YTD is 23.5 is a return in year 29. And if you see the 3 years return is 25.45. If I see the S&P 500, if I show you the P ratio of the S&P 500, if you see the P ratio, like what are the valuations we can see. Currently, the P is around 28. If you see 26, there was a little correction in the P ratio. Where if you see the the average 1 year P ratio, it has intersected here. From here, the P have increased. Here, the P was around average is 17, where P was 16, and now the P is 28. So it's indicate that the market is going to the overvaluation. So where here the April 2021 there was a undervaluation market, but after 2023 the P was shooting up, and the valuation is increasing. It looked like it is a bubbles now. If you see the 5 years graph of the in 5 years into 2023, it has crossed the average of P ratio, and the P have increased. So if the P go below the average line, it is the right time for the investment. If the P cross the average line, means the market is doing a loss of valuations, like valuation is too high. So for a 10 years also, it is very high. The average P of 10 years, if you see here, is average 17, where it is 28. And in 5 years also, the average P around this and this. In 1 year is also the average P, it was going around 17, but the P is quite high currently. So if the P ratio is increasing like this, it is very hard for anybody to go for the investment currently. The investment, I don't think is the right time for the investment in S&P 500. And the buying in the stock is might be very risky because it look like a bubbles in the market. If you see the total market cap to GDP, where really it is, we call it is the Warren Buffett indicator. Where if you see in 5 years, like it started with 120 TMC to GDP, and it have rose to around 200, double, means around the double, like where there is a correction 2022 from 190 has corrected to 140, and this was the 2023 was the right time for the to enter in the market, because it was a lower side, and you would have entering in the market, you're going to make lots of money. But currently, if you see in 5 years trend, it is all time high. It means it is significantly overvalued. It never happened. Like last, you have seen 2001 in around 30th August 2021. And after 3 years, like now is like all time high. If you see in 10 years also is all time high. And when there was a COVID and there was a crash in the market, at time this was 151, and it's see the bottom of 120. So currently it's all time high from 199. It's currently like 201. Easily indicate that this is one of the ratio where you can easily predict that market is overvalued and anything can go to the market. Let's see now the S&P 500. What's happening? Like, are the market is going to be sustainable? There is a if you see here, it still indicate that the market will go up. It shows that market will go, and how much it looks like around 2%. I can see the correction. If the market going to cross all time high, there might be some more correction. That might be some more return in the market, but it's just for the but for the short duration. For a long duration, if there is always a correction, like there is a one correction here, again it's going, and currently there is no correction coming up in the market. But if you see here, there are majority of the chances that there could be a correction in the market, like 1.92. Here is the correction in the market, and and uh, and because this, if you see this line, the RSI, the average of the RSI is intersecting. the RSI of 54, and this is the average RSI 56. If we intersect here, there are more chances the market going to going up. If you see the VIX of the S&P 500 VIX, if you see here also the it is going down, VIX is going down, and RSI is going down, and it is not intersecting the average. Suppose if intersect here the average, there is a more chance the market will fall, but currently indicating that there is, I don't see there is a market fall currently. And the lower side, the lower side, if you see the this line, the lower side of this is this point, this one. So still it is looking like 13. 13 means currently it could happen that market will shoot up 2 3 more points and then it will come back. Once it will touch here the VIX 15, VIX to 30, there's a more chances market is going to fall. I hope I have explained everything. Like VIX is currently it look like market will be going up for around 3% more. I can see if you see the total market cap to GDP and all, it is all time high. The market is in bubble. That is indicating the one of it. P ratio of market is 28, where it could be 17, and it's all time high. So everything look like the market is totally all time high. And if you're investing here, I should be suggesting you should be making profit and not be investing all your money in the market, because market is like it's anytime it can turn around and any can thing gonna happen in the market. Well, thank you so much for your time. I hope this going to help you in your investment journey and invest wisely and do subscribe my channel. Thank you so much.